Hello and welcome to the show. Today we are going to talk about Temasek, a Singapore-based investor with $288 billion of net portfolio value across the world, and 7% of that accounts from India. Let me welcome on the show Ravi Lambah of Temasek. Ravi, always a pleasure speaking to you.
Thank you.
My first question, we are in a dynamic world right now. Liquidity has been affected because of higher interest rates across the world, and that particular wish list has not been granted yet. How does it impact the overall liquidity situation and investor mindset? And add to that big events like US elections impending, also geopolitical tension in two regions in the world.
Sure, Nisha, that's a good question. There's a lot of topics there, but let me try and break it down. So how are we looking at our investing strategy? I think as we think forward, our investment focus, more of our dollars will likely go to the Americas and India in the next, say, year or so, as we think about what's happening there. And globally, you're right, there's a significant amount of uncertainty on both geopolitics. That's a concern as we think through what might happen there. We're seeing possibly some tail risks from political shifts in Europe, as we've seen in the last few weeks. There's still geopolitical uncertainty out of China, which might impact the export demand out of China. So we think about that carefully. And then we see the positives of that also can happen in certain places where we may see supply chain-led upside, that we might see for India, as India's low-cost manufacturing base helps India do more in the export side. Overall, fiscally, we see the Federal Reserve is likely to keep rates higher for longer. We think the 2% target is uncertain at this stage. The good news is that recession risks have faded. The global economy is strong. On the US side, you see the labor market is resilient, as is growth. So the overall risk framework seems to have come down, which makes us more positive to put more capital to work. As we find there are opportunities on a bottom-up basis in these countries.
Right, and where does it put India for Temasek at the current moment, especially with the big event of union elections now behind us? We have a coalition government, and I know a lot of foreign investors were really banking on a stiff majority for the BJP and also policy continuity. Has your mindset and your India view changed after the election results, which were a little bit of a surprise?
Firstly, I think for us, we're a long-term investor in India. We've been here for 20 years. This is our 20th year. In fact, it's our 50th year as Temasek, but 20th year in India. And we are able to invest across many of these cycles, be it political, be it market volatility. And so that bothers us less. What we are focused on is the future. How does the future look? We do believe the government will continue to be reform-focused. They have been in the past. They have shown the ability to, put through reforms, and we don't see, once the tide is positive, it continues to stay positive from that perspective. We see the policy reforms to continue. We think there's consistency in policy, and as long as policy is consistent, whether it's favorable or unfavorable, we can decide how to invest.
Right.
And that we see as a positive overall.
All right. So overall positive. And, last year when we spoke, Ravi, you said that up to $9 billion for next 3 years is the kind of investment plan you have for India. So by that logic, a run rate of $3 billion of investment has been achieved in the last year?
Yes. So last year we did $3 billion because we found the opportunities. And if we find the opportunities, we'll continue to do that run rate. We think, so if I step back, I think what we think about India right now, India exposure is almost $50 billion in Sing dollar terms, so it's about $37 billion US dollars. So that's our portfolio exposure in India.
Yes.
Over the next 3 years, we're hoping we can put, say, $10 billion to work, maybe more, maybe less, depending on the opportunities. Our portfolio, our subsidiaries are also investing in India, so that amount of investment may be higher, depending on how they invest. And we have subsidiaries like STT Data Centers, Singapore Airlines, Singapore Telecom, Semcorp. They're all investing in India, Ascendus, Capital Land. So their investment journey also shows that they are increasing exposure to India. So if I put that together, that's how we think about growing exposure here. We are invested in some really interesting companies already, where we continue to put more capital to work as necessary. And then we see across the portfolio an opportunity to play and build a larger exposure to India, which will be a resilient portfolio, long-term focused, where we can generate returns on a compounding basis over the long term.
Right.
And that's how we've done it over the last decade or so. India has been the best performing market for Temasek globally in terms of returns. And we hope that can continue.
Right. So you spoke about a lot of things that you're doing in India, and I would like to add to that, Ravi, that you're also an LP to many large private equity players in the country. So indirectly also, you are heavily invested in the country. Now, I want an assessment of where you stand in terms of increasing your investments for the next few years, and also for this particular year. How much are you going to spend, and are there any sectors of choice which you like more?
That's a good question, because we are very thematically and trend driven, and we've identified 4 trends globally. India fits very well in almost all of those 4 trends. So yes, because we are trend driven, we are bottom up focused, we will put more capital to work in India, because we find the trends tell us that the market is positive and we should deploy more capital. So the trends are sustainable living, the future of consumption, digitization, longer lifespans. So in line with those trends, what have we done? And that might give you a sense of what we may want to do more. In longer lifespans, we saw healthcare services as a very important part of our focus. So we invested in Manipal hospitals. We increased our investment in Manipal hospitals last year. Then if you look at digitization, if you look at digital infrastructure, ST Telemedia, which is our 100% owned subsidiary, is putting more capital in data centers. It's the largest data center operator in the country. So you're seeing that activity flow through. So like that, there are many examples. As I go through technology, as I go through on the future consumption side, we've been increasing our investment here because we think consumption demand in India is strong. We think consumption demand will drive wealth creation. Wealth creation will drive other aspects of capital market and domestic capital markets. So I think the whole cycle is quite positive. So, depending on how you want to look at it, we feel that this is a good time to increase exposure to India.
Right. And you said how much in the next few years or this particular year?
Well, I think we said over the next 3 years, we'll try and put $10 billion to work.
Right.
And if we can find the opportunities, and if we can find opportunities to partner, we'll partner with strategic and financial partners to do different kinds of investments. Typically in the past we were more minority investors. We would put money in the capital markets because we are flexible. We can deploy in public and private. We're agnostic. But if you can partner with like-minded investors, we can do larger tickets in individual companies, whether it's for control or whether it's for shared control.
Right.
So that's how we are looking at it.
So Manipal Hospitals was one of your big investments, and add to a controlled transaction. Now, is that the path that you would like to go in India for more assets going forward? Because it is a little bit of a change of a strategy for a sovereign wealth fund like yourself.
I think the important aspect in Manipal Hospitals was that we were already invested in it. We had an 18% stake. We knew the founder well. We knew our co-investors well. And we really had a very good understanding of the management team. So what did we do? We increased our exposure to a company that we already knew really well.
Yes.
We changed the capital structure in terms of who owns what, but not a lot. We had to change because we were comfortable with the way it was. It's still a board-run company. We have perfect alignment with shareholders on what we want to do next. We are growing that portfolio organically and inorganically. We have folded in, Medica, which was our other portfolio company in hospitals in the West, in West Bengal, into Manipal. So that everything starts coming together quite well, especially when you have a lot of, good confidence in the management team.
Right. So what is your ambition, Temasek's ambition with Manipal Hospitals investment? Ravi, IPO is something that the market is expecting anytime soon. Is that one of the strategies, and how soon can we expect that?
The strategy simply at Manipal Hospitals is to grow the business inorganically and organically. And the decision to buy and build will really be dependent upon the economics of both. And typically you will find when you already have scale, and Manipal Hospitals is, let's say top 1, 2 operators in the country in hospitals. Your ability to build is almost as efficient as as to buy.
Yes.
So we will make that decision based on capital allocation and what the right return framework should be. When it comes to an IPO, yes, we will take the company public. There's alignment amongst the shareholders. It comes down to the right timing. Timing is when the company is fully ready, when we believe the business is mature enough for public investors to now invest in it, so that everyone has a good outcome, and when the markets are there. So we will take our time and we will do it at the right time.
Right. Is it at all expected in a year's time from now?
I don't think in the next 12 months,
Okay.
but we will take the company public.
But you did say that the strategy is to build it organically as well as inorganically. Now, Ravi, I'll take this opportunity to ask you that Aster DM is a large asset which is right now under sale process, but Temasek has stayed away. Do you think that it's not a good fit for Manipal? Is that not the strategy to build and grow this company before the IPO?
I don't think it's fair for me to comment on specific situations out there. Like I said, I think for Manipal, we have both options on the table. We will do both, depending on what the right opportunity at that time is. Whether it's build or buy, I think is a function of, as I said before, what the right construct at that time.
All right. And also, Ravi, there are a bunch of companies on which you double down your investment, your portfolio companies, and especially coming in from the startup space, the digital space, the ones which have been struggling for liquidity in the last 1 year. Can you give us a sense for this particular strategy, and do you see great potential after doubling down on them, like PharmEasy, Lenskart, Ola Electric?
I think that's a good question because it speaks to how we think of ourselves as a long-term investor. We're always supportive of companies that we believe have a good future.
Right.
And whether the current situation is negative or positive, we have shown that we will put capital to work in those companies. So some of the companies you mentioned were going through difficult times and they needed to be recapitalized. And we believe in the future. We believe in the trend investing framework that we have supports the fact that company will do well. It had some things to fix. So if capital was the need to fix that problem, we will come up with the capital and double down on that particular investment. Some companies need capital to grow because the opportunity is pretty phenomenal. We already own that business. It makes sense for us to put more capital in it because then we can capitalize on the growth of that business rather than letting it raise capital from elsewhere. So it is a consequence of where the business is, what the opportunity is, and that comes into our intrinsic value-based decision process.
So the kind of cycle we have seen in the startup space where the valuations rose very quickly, some of them could go for an IPO, others got stranded, and then the liquidity crash took place. Does that worry you as an investor, especially when we have seen a few casualties also in some of the sectors that you have a presence in, like the edtech sector?
No, I think it's a fair point that there were excesses in certain areas of the market, in certain sectors. There was excesses globally, not just in India here, right? There was excesses in the sort of unprofitable tech space, which took a significant amount of capital into certain companies that probably may not have raised capital at the right valuation at the right time. So that all has corrected. And the correction was a good thing.
Yes.
Because it's brought things down to the level where now profitable growth is what investors expect. And if you can see profitable growth, then it makes sense to put capital to work, provided the runway is there. That's how we look at it across the entire sector. So I don't think it's a matter of choosing. It's a matter of determining where you want to put capital to work, where you will see the potential for profitable growth, and then if the macro is supporting that particular trend, then we should play it.
Right, because some of them have seen even 90% drop in the valuation. So to pick from there will be a Herculean task. What is your view on overall online pharmacy business in the country?
We still think the potential is actually pretty significant because as we've seen in different, direct-to-consumer businesses that have gone online, the execution is important.
Yes.
Access to capital is important, and then you got to see what the opportunity is.
Yes.
The mindset for buying online is across many different sectors. Online pharmacy is just one particular subsector of that. We see growth in all of them.
Ravi, lots more to discuss with you, but after a very short break, stay tuned. Welcome back. We are in conversation with Temasek's Ravi Lambah. So Ravi, one sector where you have heavily invested, Ravi, in the last 1 year is the EV space. That's the upcoming next generation mobility space, and probably the electrification will happen first in the automobile space, especially in our country. And two of them are going for an IPO. Of course, IPO question next, but Ola Electric as well as Mahindra Electric. What's your view on this sector, and where is it headed? And especially with the latest, tiff with CNG players and everybody trying to get more subsidy and support out of the government. How do you see this whole ecosystem?
At the high level, energy transition is something that we are focused on.
Yeah.
We are focused on, ESG, sustainability. We think that electric vehicles is a very important part of that entire transition in the industry, in the auto industry.
Yes.
And look, we picked two companies to invest because one was focused on the SUV space, one is on the sort of two-wheeler space. One is a staple, effectively a consumer staple in the country, where two-wheelers are something that are necessary, whether it's got to do with people for mobility, for food delivery, and everything. So it's a staple business. So we think there's a long runway for it. We've known the company from our experience with them in the rideshare business, and this was a good extension of our relationship as a long-term relationship with Ola, and we continue to believe in the EV space in India.
Right, and about two, EV companies, pure play, two-wheeler companies gearing up for an IPO, and of course your portfolio company, Ola Electric, being almost ready. Ravi, in the pre-IPO round, you had invested at $5.5 billion of valuations. You think at the current environment, that is a valuation, and an uptick to that valuation is quite achievable, and your view on part exit from this IPO?
Okay, I don't think it's fair for me to comment on something that's happening right now. All I will say to you is that we are long-term investors in this business because we believe in the long-term growth in the business. The fact that we may be taking some money off for the IPO is a consequence of of helping the IPO happen, and we see this as a long-term play. We're comfortable with the valuation we invested. Of course, we always hope that we will make good returns out of all our investments, so this is no different.
Right, and you continue to also grow your portfolio when it comes to the early stage startup kind of businesses. You've done quite a bit of that in the last year. What is the overall strategy now, Ravi, there, and what are the kind of companies now you're picking? Because there has been a clear sector rotation. There was a time when fintech was up. Now everybody is talking about AI. So combining your strategy on this new age businesses, strategy on AI combined with that, how do you view it, and what is the thesis of AI investment for you?
So just to break that question down, so in terms of the early stage businesses, we are putting capital to work where we see profitable, the ability for the company, the potential to be profitable in the short term. If you don't see that, then we struggle only because that time could take longer and we can put capital to work elsewhere. So that's just a selection process based on profitability and potential profitability. AI is a great question. It's a question that we see globally. We started recognizing the AI disruption or the AI, sort of contribution to industry several years ago. We set up a pod in the US, which is a team that's actually focusing on business building within AI, and that team is giving us very good insights. Based on those insights, what we're seeing is there's almost no company in our portfolio globally, and in India too, who is not focused on AI. And there are two principal focuses on AI. How will AI disrupt my business? And how can I create value out of AI? And if I look at both those, we are laser focused on that with all our portfolio, helping them understand that if you want to do something new, what will AI do to disrupt that? If you want to put capital into a company that we haven't invested in before, we want to see how AI will disrupt it and how AI will create value. So I would not look at AI as a specific theme. I think it's part of our core investment process. All
right. Let's come to the exit opportunities. You have to, exit right for the right investments to really take place and more investments to really take place. Now, of course, Ravi, in the last 2-3 years, India has presented opportunities when it comes to IPO market and new age businesses as well. And last year was a breakthrough year in terms of having large exits done on our public, market platforms, which was a breakthrough, year for us. and it gives a lot of comfort to investors like yourself, and you have beautifully also capitalized on that opportunity. How do you see the exit opportunities going forward? At least two of your portfolio companies are readying for an IPO. So let's talk about the exit opportunities and also Niva Bupa, because we haven't spoken about the financial services space.
I think at the high level, again, Nisha, my view is that the domestic capital markets in India are really maturing very quickly. India is now the fifth largest capital market globally. What does that mean? That means that you have companies with market caps are rising, daily trade volumes are rising.
Yes.
The ability to deploy larger dollars is there, much more than it was before. Ability to exit larger dollars is also enhanced significantly. So you can do $1 billion sale, get out of a listed company, overnight, which is now getting easier. So for investors like us who are long-term focused, we disregard the day-to-day, the month-to-month, the year-to-year. Long-term, we believe that we can now invest larger dollars and we can exit in larger dollars too, because the markets are giving us that opportunity. So I think to me, that addresses everything we would do in the portfolio when it comes down to looking at timings of investment and divestment.
Right. So the equity market valuations, even though they have given good exits to the investors, but on the flip side, the investment and deal conversions have been difficult. How do you view investments at this point, and also the difference between the public market and the private market valuations?
That's actually a great question, because I think ultimately the valuation is not right, you don't invest. Because I always believe that the only thing you know for sure is the price you pay. Everything else is blue sky, because you've got to look at the future. So if the price is right based on our intrinsic value test, it tells us it's the right time to invest, the management's right, the company's right, the sector's right, then we will put capital to work. Yes. If we believe the valuation's high, we just won't invest at that time. And again, when it comes to public markets, India has always traded at a 1 or 2 standard deviations higher than global averages. And we've been comfortable with that investing because we believe that if you buy at that level, the growth in the market, the growth in the business, and the value you can generate over a longer term potential is there. So we don't mind paying that price for the right business. So we are less worried about the valuation in the sense when we put capital to work, we always get comfortable that the price is right. If it's not right, we just don't buy.
So has it changed your strategy towards investment in the recent past?
Well, we put $3 billion to work last year, and we continue to look for opportunities. We are positive. Like I said, we will hold back if we think the valuation is higher, and it is higher in certain places, but at the same time there's value to be taken in certain places. So we're just looking at it very systematically.
I wanted to take your view on financial services also, Ravi. Of course, one of your portfolio companies is heading for an IPO, Niva Bupa. Insurance has been dynamic over the last few years. How do you view this company and overall financial services currently?
Again, it won't be fair for me to comment on Niva Bupa, but we made the investment on the basis that we have a strong belief that insurance is a great place, huge runway, long way to go, and just started actually in many ways. So we have invested in public markets and insurance. We have invested in the private space as well. The fact the company is going public is just another milestone in its own journey. IPO is a one-point-in-time event, right? Ultimately, we are focused on the long term, and that's how we look at it. Financial services, insurance is a place we will put more capital.
All right, Ravi, always a pleasure speaking to you. Thanks so much for sharing all your thoughts.
Thank you, Nisha.
Thank you. And with that, it's a wrap. Thanks so much for tuning in.